But today I got my new mortgage escrow rebalancing thing, whatever it's called, and my mortgage payment went up $152 a month. 152.
Over the last 3 years, my mortgage has gone up $600.
Yeah, that's not a mistake. It's happening everywhere. Homeowners are watching their payments spike by hundreds or even thousands without any warning. You didn't refinance, you didn't take out a second loan, you actually didn't do anything wrong. But your mortgage, it just exploded. And I'm gonna show you exactly why, what's really going on behind the scenes, and most importantly, what you can do about it before your budget breaks. And stay tuned until the last story, because these people either got completely scammed or work with some really unethical bad people, because their mortgage went from $3,832 a month to $7,200 a month overnight. This is no joke. So let's dive right in. Okay, I make these videos to really help you guys out so this doesn't happen to you or anyone you know. So first, let's go through the most common reason that people's mortgages suddenly go up without any warning. See, most people think your mortgage payment is just your loan, but it's not. It's principal, interest, and something called escrow. That's where your lender holds money to pay your property taxes and your home insurance. And guess what? Those two things, property taxes and home insurance, they're the reason most commonly that your mortgage payment just jumped. Let's start with insurance. It's not just nudging up, it's exploding. Rebuild costs are up. Storm damage claims are up. Lawsuits up. And insurance companies, they're either pulling out of markets completely or raising rates so high you can barely afford to stay covered.
Our mortgage went up $400 because $200 of that is what they're estimating is going to be needed to cover next year's homeowners insurance, but also another $200 to put back into the account what was taken out negative, because nobody knew that insurance rates were going to go so high.
Let's break this down even more. 2023 and 2024 were some of the most expensive years for disasters ever recorded. Hurricanes, floods, wildfires, you name it. And insurance companies, they don't just absorb these losses, they pass them on straight to you. For example, according to the Insurance Information Institute, insured losses from natural disasters topped $100 billion in 2023 alone. That's not just a record, it's becoming a trend. Second, building materials and labor costs are still crazy high. And with the current tariff wars that are going on, they're probably gonna get even higher. So now, if your house burns down or gets wiped out in a storm, it costs way more to rebuild it today than it did even 3 years ago. So even if you never file a claim, your premium will go up because the cost of replacing your home keeps going up. I had a client last month, didn't even have a claim. No water damage, no fire, no nothing. Her renewal still jumped 30% just because the replacement values went up. And third, some insurance companies are just flat out leaving certain states. Florida, California, parts of Louisiana. Insurers are just pulling out because it's gotten too risky. When there's less competition, prices, they skyrocket. And the worst part, most people don't even find out that their premium doubled until they get their new mortgage bill because it's all baked into the escrow. 1 minute you're paying $2,100 a month. Next thing you know, it's $2,700. And you're scrambling around trying to figure out what just happened. And that's just half the story. The other hit, it's coming from your property taxes, because insurance is not the only thing sneaking into your monthly payments. Your property taxes are quietly rising too, and they're catching a lot of people off guard. If your home was reassessed recently and your value shot up, even if the market has cooled since, your local government, they still want their money.
My mortgage payment was $1,151. After my first year living in that house, they raised my mortgage to $1,579. So basically, I believe it's every single year they come and do an assessment of your house. And they say, what's the value of this house from last year to this year? And if your property has increased in value, they are going to increase your taxes. But no, I just got a bill in the mail and it said a $428 increase due in 2 months.
This happens all the time. Here's how it works. Your local government, county, or city reassesses your home's value periodically. And when they think your home is worth more than before, they raise your tax bill. Now, this isn't based on what you actually paid for the house. It's based on what they think your house is worth right now. And after a few years of skyrocketing values, they are reassessing properties all over the country, and it's not in your favor. In fact, Adam's 2024 report showed that the average property tax bill in the United States went up nearly 4% year over year. And places like New Jersey, Illinois, Texas, and yes, here in Maryland, increases are even steeper. I've seen clients open up their new tax bill and it's up for $1,200 for the year. And guess where that difference goes? Straight into your escrow, which means you got it, a higher mortgage payment. I had a buyer here in Montgomery County, Maryland, who was shocked when their property tax assessment jumped by $75,000. And they hadn't done a thing to the house. No upgrades, no additions. The only thing that changed, they bought it during the peak of the housing market. That bump alone raised their monthly payment by $200, and they didn't even see it coming. And the worst part, they had no idea until they got that lovely escrow letter in the mail saying, your monthly payment is going up. Surprise. And let's be honest, local governments are under pressure too. Post-pandemic budget gaps, teacher shortages, infrastructure costs. They are looking for revenue. And guess what? Homeowners are the easiest targets. This is not about fairness. It is about funding. But here's the good news. You can appeal your property tax assessment. If you believe that your home is overvalued, you can challenge it. Show recent sales, pull comps, even hire a local appraiser to back you up. And if you have a friend who's a local real estate agent, they can help you with the comps. Every county has a process. It's usually free, or if it does cost something, it's usually pretty little. And if you win, you could save hundreds or even thousands off your yearly tax bill. Now let's talk about the last story.
We purchased a home here last December. The price was higher than our first home, but it was something that was doable for us. So then in this February, we received the new mortgage for the year that had like the escrow and all that. And it showed that we had an escrow shortage of $23,000. Our mortgage went from $38,32 to around $7,200 a month.
Here's another sneaky reason why your mortgage payment might spike. And this one, it catches a lot of new home buyers off guard. When you first buy a house, especially if it's new construction, your lender might calculate the escrow using the current tax bill on record. In a lot of cases, that tax bill, it only reflects the land, not the house that was just built on it. So let's just say that the land was taxed at $900 a year. Your lender sets the payment based on that. Then, boom, 6 months later, the county updates the record to show your brand new $600,000 house now that's sitting on the land. Now your tax bill jumps to $6,000 a year. Your escrow comes up thousands short, and suddenly your lender sends you a lovely letter. We need to raise your mortgage payment by $400 a month, effective immediately. You didn't do anything wrong, but you're paying the price for how long the system takes to update. Another example is if a house was torn down and a new house was built. A lot of times the property taxes are based on the assessment of the old, smaller house. When the new house gets reassessed, the property taxes will adjust as well. So please keep this in mind. When I list a new construction house, I always call the county or the city, give them all the information about the new house, the size and everything they asked for, so they can give me an estimated property tax amount for this new house that I can pass on to the buyer. It's the right thing to do, but a lot of agents don't do it. So to wrap it up, if your mortgage payment went up recently, don't just blame interest rates. Look deeper. Look into your escrow, into your taxes and your insurance. It's not your imagination. It's not bad budgeting. It's the system changing underneath you. And if you don't get ahead of it by challenging your tax assessment and shopping your insurance hard, it's gonna keep eating into your budget year after year. So first, review your escrow statements. Look for errors homeowners. They use estimates that can be wildly off. Second, challenge your property tax assessment. You can appeal it and sometimes win. If they overvalued your home, make them prove it. Third, shop for your home insurance just like you would shop for a car. Call 3 different brokers. Look at bundling. A lot of times they give you a special rate if you bundle with your car or your personal property, anything else. Ask about higher deductibles. This is where loyalty costs you. And lastly, don't wait. This isn't a one-time spike. Experts are already predicting more increases in 2026, especially in high-risk markets. Drop a comment below if this has happened to you and let me know how much your payment changed. I'm tracking what's happening all around the country and helping people make sense of it all. I'm Caryn. I've been in this business for over 20 years and I've never seen homeowners blindsided quite like this. So go ahead, hit that subscribe button, because while all the articles and headlines are gonna keep talking about interest rates, I'm gonna keep telling you what's really going on and why people are actually losing sleep at night. Let's just keep it real. And if you missed my video on how this one family lost everything, definitely check it out so this doesn't happen to you or any of your people. Thanks for watching. I do appreciate it. Bye.